Hello everybody. The fantastic rise of the price of Bitcoin has been drawing quite a bit of attention recently, and no wonder why. It's looked like a rocket that has taken off. And if you're interested in monetary matters and in global financial markets, it's hard not to pay attention, even though this is a tiny part of the global financial markets, and one could even question whether really it is part of the global financial markets. Nonetheless, this phenomenon has been growing and we're getting a lot of questions about it. So I thought I would give an economist take on this. And I'll try to do it without screaming bubble and without going in the other direction of being too hyped about the technology. I'll try to think about Bitcoin and other cryptocurrencies from an economist perspective, from the perspective of monetary theory. So let's start with a couple of equations and start to think about it as such. Well, how do we describe money? Well, first of all, we can ask, is Bitcoin and other cryptocurrencies really money? Well, normally we say that money serves three purposes. It's a medium of exchange. I can buy and sell stuff exchanging money for goods. The second thing we can use money for, it's a unit of account. Is it $1 or $5 that equates something I can buy in terms of a commodity basket? And finally, it's useful to store value. We can put our value, we can exchange value into money. The question is Bitcoin and other cryptocurrencies fulfilling those criteria? And the answer to that is no, they certainly don't. Just from the pure perspective of the volatility of the price of Bitcoin and other cryptocurrencies, it's very hard to imagine that you would use it as a store of value. You wouldn't take 20% of your wealth and put it into Bitcoin, well knowing that the price might fluctuate 20% a day. You don't want to enter a contract saying, well, in 5 years I will fix my salary in Bitcoins over the next 5 years or next year. You'd be very reluctant to do that, or you at least want to hedge that. And so in that sense, it's probably not money. However, that does not mean it could not develop into money. And some would say, well, Bitcoin and other cryptocurrencies have no intrinsic value. It's not backed by anything, by, for example, gold or some legislation. Well, in fact, most currencies, if not all currencies in the world, are not backed by anything. The dollar, the euro, they are fiat money. They're essentially just printed by central banks, and they only accept it because we accept it. We accept them because we know other people accept them. This is what economists call a network externality. So money can gain value from being accepted as money. And there is nothing rooting out that couldn't be the case for Bitcoin and other cryptocurrencies. And in fact, there might even be signs that this is being accepted, the fact that everybody today knows what a Bitcoin is, and nobody knew 5 or 8 years ago. So it is getting some of those network externalities, and with the broadening of the market, with the introductions of futures markets, etc., we're getting closer to having some network externalities that might bring it closer to being money in the terms of being accepted. And even we are seeing some internet retailers and so forth starting to accepting Bitcoin, an indication that it's becoming a micro medium of exchange. But again, we are very far away from this being a generalized medium of exchange, a generalized unit of account. We don't do that. Just from the pure fact, we don't know what the Bitcoin will be tomorrow when it can fluctuate 20 or 30% a day. It's pretty hard to think about it in that subject. But we could move in that direction. One of the things is it's getting more knowledgeable, it's getting accepted by people. And then, of course, maybe over time, the stability of the price of Bitcoin will be going up. We don't really see any signs of that at the moment, but if that were to happen, that could happen. So one could also think of cryptocurrencies that moved in that direction, being completely fiat, but still being accepted as money, even though they're not printed by central banks, but by essentially private issuers or algorithms, as it essentially is. So I'm not ruling out that cryptocurrencies couldn't turn into real currencies, real money in the future, but now I would rather conceive it as, let's call it digital metal, crypto commodities. It is more like different commodities like gold, aluminium, silver, even though they don't serve purposes of production. In that sense, it's actually fairly close to gold, but still a lot more volatile, for example, than the gold price. But let's think about the crypto market as a monetary economy, and I try to show that with two equations. Essentially, any market is about the supply and demand of money. Let's start with the demand of money. We can describe the demand of money from what we call the Cambridge equation, which is essentially a version of the equation of exchange, where we say that the demand for money is a function of the economy as such. The price level times the real GDP level, this is nominal GDP, and the K is the share of currency we hold as a share of the entire economy. This, in terms of money of velocity, is the inverse of the velocity of money. So that's a very simple version of the demand for money. We could also think of it as this side of the equation, the entire monetary Bitcoin economy. This is how many exchanges is being turned over in Bitcoin. Think of it as that, the total turnover in Bitcoin in a given period. So that's the demand for Bitcoin or for other cryptocurrencies. And then on the supply side of the economy, a challenge for any private issuer of money is that he can essentially just say, I will start to print Mamo coins tomorrow, and the Mamo coins will be printed at my will. So I can double or do whatever I will with the currency tomorrow, and I'm in control of that. That's really the problem of any central bank. They can do that, but that also means there's no credibility. Because I wouldn't accept money from somebody who could double the money supply tomorrow or triple the money supply tomorrow just out of the blue. So what central banks are doing is, first of all, they get independence from governments. So governments will not force them to do this. The second thing is that they announce they will follow a rule. They say, we have our inflation target. So if you have an inflation target and that is credible, that is also essentially a target for how much money you will print. You will never print more money than to undermine that inflation target. Normally that can be very challenging for a private issue of money to do this, and therefore historically private issuance of money has to some extent been linked to some kind of reserve. For example, gold or other commodities that I would write on my note, if you give me the Mamo coin back, I will give you 2 kilos of gold back. So that would be backed in some way. However, that's not the case with cryptocurrencies, and therefore the supply side of cryptocurrencies is different. What is the real innovation, in my view, of crypto coins and crypto money is that the algorithm, the digital algorithm that essentially turns out digital money, digital coins, is completely outside of anybody's control. And if you think of the Bitcoin, it actually just started out, I had drawn it here. We started having essentially no Bitcoin, and the algorithm just will increase the amount of Bitcoin gradually. But at some point, it is capped. I think it is at 21 million Bitcoins. There it stops. I think we're at 16 million now. So there is essentially a cap on how many Bitcoins we can produce. And it's outside of the control of anybody. Then there is so-called miners who, as with gold, can go out and mine Bitcoins. Essentially, again, a digital mining and create their own Bitcoins, but that's a costly process, it's time-consuming, and it's capped. And the way the algorithms is written, this becomes harder and harder over time, and ultimately it will not be possible to create more Bitcoin. So think of this algorithm as the same thing as a central bank's monetary policy rule, where the central bank, for example, say this currency is linked to another currency, is a fixed exchange rate, or this currency in this monetary policy rule, we have a nominal GDP target, or we have an inflation target, and so forth. The Bitcoin algorithm by which we create new Bitcoins is a monetary policy rule that's impossible, at least as far as we know, to change for any individual. So the Bitcoin is fixed. So if we think of that, we have a rule where essentially we can think of Bitcoins as being a fixed amount. So the supply of Bitcoin is fixed. At least to the extent that it's growing completely unrelated to the demand for Bitcoins. There is some impact through the mining, and we can get overshooting and undershooting compared to the long-term trend in Bitcoin. But overall, think of Bitcoins and other cryptocurrencies as being fixed. Some cryptocurrencies are not completely fixed. Ethereum, as far as I know, can actually grow forever, but it still follows a rule that makes sure that we don't have explosive growth in the supply of that cryptocurrency. So in the supply-demand perspective, think about we have a fixed supply and we have the demand for money here. And you will see somewhat oddly the demand curve is upward sloping. But that is to think of this in terms of Bitcoin price level, not in the price of Bitcoins, but what you can buy for Bitcoins. So in the same way, the price of Bitcoin is an exchange rate. The inverse of the price of Bitcoin is essentially the price level of what you can buy for Bitcoin. So when the price of Bitcoin goes up, you have Bitcoin purchasing power deflation. So that is what we have here, 1 over the price of Bitcoin. The supply is fixed, both in the short and the long term. And then we can have what can move the demand for Bitcoin. Well, one thing that can happen is that Bitcoin simply becomes more acceptable. More people notice Bitcoins and say, well, we want to use this. What their motives are, we can speculate about. If I'm living in Venezuela, I'm in a world where the alternative money I have, the Bolivar, is completely unstable. It's essentially useless. The central bank has inflated the currency dramatically. The currency is fluctuating widely. And I can essentially only move into alternative currencies, but the government has introduced capital and currency control, so that's very hard to do. I would have to run around in the black market with physical money and exchanging that, maybe trying to get some gold or other things. If you're in that situation, Bitcoin becomes attractive. And that we clearly can see that there's a lot of trading going on in countries with currency and capital restrictions. There, Bitcoin suddenly becomes an alternative, not because it's a good money, but because it's a better money than what is available. So there is some demand for that. So Bitcoin and other cryptocurrencies becomes attractive when other monetary systems fail. When they don't fail, it's really hard to make them attractive on their own as general accepted money. But some of that is happening there, and we can see that, and clearly some of the cryptocurrency demand comes from this black or gray market. That doesn't mean that that's bad. Getting around capital and currency restrictions could easily be argued to be something which is positive from an economic efficiency perspective. Obviously, there are other uses of black money or gray economy money that is less good, but nonetheless, we're seeing that. So we can also think of when the price of Bitcoin is going up, probably the attractiveness of Bitcoin in general goes up. So there's a bandwagon effect or positive network seasonality, and that is not the same as a bubble. I should say that's not the same as a bubble. Getting it more acceptable is not the same as a bubble. So in that sense, if that's happening, what is happening is that essentially the demand for Bitcoin goes up, and so we get Bitcoin deflation, or rather the inverse of the price of Bitcoin drops, which is the same as a rise in Bitcoin. And this, of course, is what rise of a Bitcoin price, and this is, of course, what we've seen recently. Other things that could drive Bitcoin prices is, well, of course we could think of it, what if we could move the supply, but we can't do that. So one of the problems here is that the very high volatility in the price of Bitcoin is exactly because the price of Bitcoin is fixed. Imagine that the algorithm had been written in a slightly different way. Imagine that there had been an algorithm where the supply of Bitcoin would be dependent on the price of Bitcoin. Then if, for example, the Bitcoin price goes up and there was an automatic rule where we would then see the supply move, then that would reduce the fluctuation in the price of Bitcoin. So one of the things is there's essentially within the Bitcoin setup a conflict between two things. First of all, on the one hand, making sure that Bitcoin is credible. And that we get that credibility by having an algorithm that restricts the issuance of Bitcoin. On the other hand, when we have that rule, that means that when we have shocks to demand, velocity shocks, then the Bitcoin price goes up and down a lot. So there's no stabilizing factor. So these two things are conflicting. If we look at a central bank in a traditional sense with an inflation target, if the demand for that currency goes up, that would push down prices, that would be deflationary. If there is an inflation target, then the central bank will respond by increasing the money base and pushing down or pushing up prices again to stabilize the price level. That is not happening in Bitcoin, but we could think of algorithms, and I hope to see that kind of algorithm will be developed in the future, and that would make it more likely that cryptocurrencies would be more acceptable as real actual money as a competitor to central bank issued money. So that's one thing. Another thing, of course, we could see is that when the price of Bitcoin goes up, somebody says, well, that's a bubble, or now it looks very pricey, or it's gone up too much for some whatever reason. But we like the issue. Could we find an alternative to that? And that is, of course, what we're seeing. More and more Bitcoins are entering the market. It might also be that other cryptocurrencies entering the market. It might also be that other cryptocurrencies with better features technologically would enter. Some are claiming that Ethereum is a better technological setup than Bitcoin. I have no view on that. But if you think so, it becomes an alternative. And that, of course, could put the price or the demand for Bitcoin in the other direction. So, of course, tomorrow, there might become an alternative to Bitcoin, which, for example, with much lower price fluctuations, then there could be a dramatic drop in the demand for Bitcoin and a dramatic drop in the price of Bitcoin. Another thing is, of course, Bitcoin has the same characteristic of money in the sense it doesn't pay any interest. So Bitcoin is essentially not interesting to hold if you don't want to use it for exchange of some kind. You don't want to hold it because it's not paying interest. But what have happened to interest rates recently is, of course, they're essentially zero in the developed world, which is, of course, something that is helping Bitcoin. But as interest rates going up, in the developed world, in the US or in Europe, the demand for Bitcoin should be expected to decline. Accordingly, the elasticity of the demand for Bitcoin as a reaction to these interest rates, we have no clue about now because the market is so new, but it will be interesting to follow how that develops over time. And then something, of course, we need to focus on is what we call a Bitcoin taxes or regulatory crackdown on Bitcoin. There is no doubt that central bankers around the world are very, very skeptical about this phenomenon. Tax authorities are very skeptical about this. There's a lot of worries about this is being used for drug traders, for getting around financial regulation, money laundering rules, etc., etc. And we have seen a crackdown, for example, in China on this, and we don't really see any countries really embracing Bitcoins. Russia has been talking a little bit about it, but probably again, that would worry everybody else because is that about Russian sanctions and so forth. So we can see Bitcoin prices move quite a bit on regulatory news, and I wouldn't certainly rule out that we would have a fairly widespread global crackdown on cryptocurrencies from central banks around the world, and that could have a very negative impact on prices. So finally, to wrap up, Bitcoin and other cryptocurrencies are not money. They're not currencies, and therefore more rightly we should call them crypto commodities. But they are moving in a direction potentially of becoming more closer to money, more moneyness, so to speak, and they could also be thought of something that could be part of investors' portfolios if the market broadens, if the liquidity in the market increases, and if we get more stability in the price developments. And we might see that because of developments of futures markets, and we are beginning to see that. So I'm not a pessimist on the cryptocurrencies or the crypto commodities. I think that this might have a future, and I very much like the technology of having an algorithm that controls the supply of the currency, which makes it possible, at least theoretically, to think of this as something that could be in existence in parallel with central bank issued money. And I'm also, even though prices have skyrocketed in Bitcoin, I'm very reluctant to say that this is a bubble, simply because of this thing that the price of fiat money completely depends on network externalities. If we accept it has value, it has value. If we don't, it doesn't. So overnight, the value of cryptocurrencies, crypto commodities could collapse because of regulatory changes, or because somebody says, well, you can crack this, you can hack the code of this, so you can create bitcoins on the side or whatever. So that can disappear overnight. But the use of the term bubble is something different. It's something that we might want to use in equity markets, where there's a underlying income flow, but we don't want to use it when we talk about money. There it's like, but that doesn't mean that prices cannot fluctuate dramatically. In fact, they might drop dramatically, and then somebody will claim there has been a bubble and now it's bursted. Well, we have already seen that in Bitcoin. We have already seen a couple of years ago dramatic drop in Bitcoin prices, and the bubble had bursted, and now prices are up again. Again, I have no clue where the price of Bitcoin will be going in the future, but I like the technology. I like the idea that we can have alternative to central bank issued money, and I think that we will see more of this in the future. But whether Bitcoin will come out as the dominant crypto commodity in the future, that is in no way given. But we'll see, and hopefully I will not have to talk too much about this. But if it develops over time, we will return to the issue. Thank you very much, and Merry Christmas.